Okay, I wanted to introduce this new method that I discovered about 2 weeks ago, and but since then I changed several things and improved both method and the way I'm recording. Currently, this is being recorded on in ThinkPad's on internal microphone because I found that sound is much better. Okay, so this new method came out a little bit strange because for almost a month I completely stopped working on trading, and my mind was washed out of all the trading content, and I was focusing on engineering and my projects and stuff. So I was a little bit afraid that I'm neglecting trading. So after about a month or two of working on engineering, I had so many tasks on engineering side that I said, okay, let's just for fun and completely without any obligation, let's try just keeping in touch with trading. I wasn't really trying any new testing theories or anything. So I started using this because my mind was full of engineering. I apply this sort of minimal attention strategy which was essentially based on just watching the market regime, because watching market regime requires minimum attention. You just throw one glance at the screen and that's that. And you decide whether it's choppy, choppy, or trendy. And where is it relative to the nearest peaks? And in the way I'm trading, I'm not even looking at yesterday's behavior or trend or anything. No, I'm just looking at this one thing, what happens in market open, nothing else. And the peaks and troughs and momentum bursts, fast movers like this fast mover, or like trendy fast movers like this. That's all I'm looking at, nothing else. And what's amazing is, okay, so I'm just trying to describe this complete detached state of mind, which trading was completely secondary. I was busy doing something on engineering. I forgot what, because 2 weeks passed since all this started. And my focus was on market regime. And by the end of this first day, which was Monday, 18th of May, 2026, I had 29 points. Okay. And that's absolutely, totally, unbelievably huge. That's like totally out of whack. I never made such a big, like, if I made any money on a daily basis from trading bonds, it would be like a 5 points. That was my best day, but I would be losing like 10, 15, 20 points, God knows how much. Okay, so, and as far as patterns, no, there will be no patterns in trading this. I will be just watching I will be watching CVD, and this is a DAX, and I will be watching what DAX is doing, and I would then watch for like this end of the chop breakouts, like this end of the chop breakout. So market fell, then chopped, and suddenly there was fast move. And or like this retracement, and then there something slow down. And then I would enter, and I'll just leave it. I will just kind of set a profit target far away, reasonable, not too far away to the next previous chop, like here. Okay, obviously I targeted this chop, this step, and here maybe I would have been targeting like bottom of this, or like a little bit more, like here. Okay, and when these fast momentum risers, I would be just like watching, because inside these fast momentum risers, price action is just jumping up and down like crazy, and that's a main characteristic. So I would try to put my stop loss far out of this jumping up and down, and that cannot be seen on a static screen. One needs to record video of such a situation. So I'm putting stop relative to that fast up and down move inside the fast momentum riser like this one. And these are produced by news. And then I would either trade inside that fast riser, like I attempted here, and I would try to exit as soon as I would see any kind of dying down of momentum, any time of where sales start dominating. Okay, and on this particular day, obviously, I was trading pretty much in my normal style, and what had happened is I had a few wins and few very small losses, which I managed to minimize by dragging a stop, trailing the stop loss. Okay, like here, obviously, I was profitable here, but I was dragging a stop loss, one could see. And here I was dragging a stop loss. And here I couldn't believe my stop loss was so small, but maybe it was. Okay, and here again, I saved myself by dragging half my stop loss. So idea as well in this approach is to actually try and catch big movers. So it's let's profit runs philosophy, risk management type. That's why there is this big catch. Look how big it was. I just set it very, very far. And that one that's trade number 7, 24 points. That's like totally abnormal for me. 4, 5, 6 points was big. And when one kind of like, I'll show that in the next few screenshots. Okay, there is on my calculator that I summed up everything, and I don't know how many trading days is that. 1, 2, 3, 4, 5, 6, 7, 8, 9. Okay, so it's 2 weeks of trading, 9 trading days, and I wasn't trading every day because main rule is trade when you feel happy. Main rule is don't overtrade, don't chase trades, don't force trades. When you feel that market will do something, do it without hesitations. Otherwise, don't force trades on yourself. And there are days when I made the huge losses, like this day when I made minus 25 was my loss. But then I had a day when my win was 35 points, and then another where my win was 29 points, and I had here a day with 20 points, and so this one big loser day did not matter, like to make in 2 weeks. And okay, so on the drawdown of minus 25, I made 55. That's Sharpe ratio of 2. That's a Sharpe ratio of 2. That's a huge Sharpe ratio. Like, never in my life. I'm laughing because never in my life. I was so carried away with this. So now it's very important to maintain this, and that's why I'm doing this video, putting more flesh on this. So, and I beautified it with this table and these new kind of markers. As I progressed with this, I introduced innovation. Like I put description for reasons for trades, and these reasons are just my observation. I don't trade any specific pattern. It's just whatever looked right in that particular moment. Sometimes I even made a specific notes to highlight that I'm not predicting market. I don't have any feeling for market. Nothing. It's just don't stop trading when you start losing. That's a main thing. Keep trading, because very big winners like this one will actually come. That's the whole. Let the profit run. I don't know what my win-loss ratio is. I haven't calculated it yet. But the idea is to try to catch big winners, 2, 3, 4, 5 times bigger than a stop. Like this is a relatively big winner. This one, okay, I was risking very little on this trade. Look, this is like 4 or 5 to 1 relative to the stop. This one is around 3 to 4 times stop, and so on. That's what makes this trading so successful. 2 to 1, maintaining that 2 to 1 Sharpe ratio. That's the whole. And one thing that I learned as I went along, avoid choppy markets. There are no big moves in choppy markets. Don't force trades on yourself. Wait for volatility injection, to use 2 long words. Like, wait for a markets to get a kick from some news or from some change in sentiment or something. Because the reason why I made so much money in this day, because this day is more volatile than a normal day. Okay. At the opening, it looked as a sort of what I call medium volatility day, but one could not see that during the first few hours. As you need more information as session keeps going on. But main thing is to kind of it's exactly what I didn't want. Okay, so that was Dies Mirabilis, or wonderful day, okay, in reference to Albert Einstein's Annus Mirabilis. Einstein had 5 years of his life when he published, I don't know how many papers, okay? So next day, I was so busy with engineering that I couldn't pay attention. I had one loss, and although it was a good read, actually I had a good read. I didn't write the reasons here, but never mind that. It went immediately up, so I was trailing stop, but I did not mark where from. So I was trailed the stop, and eventually market came back on me because obviously I most likely I wanted to go for a profit target, which is somewhere here. So I wasn't happy with this good read. I wanted more, and then came back and hit trailed stop, but that's no biggie. No single trade is important. No single day is important. You just keep trading. That's the absolutely the main takeaway of this. Okay, so here we are already on Wednesday. I was again busy with my engineering stuff, and obviously this is easy to see that one would read this as the diagonal day because market broke above this peak and it's very extended. There is no too much kind of like chop like here. Everything is extending, okay, smoothly extending and falling smoothly, extending smoothly. So this looked as diagonal day, but I said, okay, it rose so much, let's grab a quick reversal. That's I was here for that quick reversal after this peak, and I would say that this was actually a good read, but only problem with it was that it didn't go very far over a very long period of time. Another thing is that I'm noticing that trade it that one should start using time stop if trade does not, because I noticed that trades which make me lots of profits, they immediately in the first 5 minutes or 10 minutes they move in my advantage. So I don't really need to kind of like sit for 2 hours and wait for a trade. No, if it's I should apply time stop to eliminate these trades that will reverse against me, because most of these trades on which hit the stops, they are actually stops. They are actually trades in which prior action was just chopping inside the stop. It wasn't like moving away into the positive grounds. No, it was okay. So this day I was working on engineering and I was finishing off some stuff. And this day I didn't have. Actually, I had so much other work on engineering that I've done nothing on trading. And then eventually I came to this day, and okay, we had here this like intense chop, and this is like immediately after the opening, and okay, I correctly positioned myself, but I applied time break, time stop, and because for 15 minutes it wasn't really moving for me, and it's better to take a small stop than take full stop. So basically trade 1 and 2, okay, trade 2, I remember this trade because there was this chop and then it burst. And usually these bursts are particularly a burst like this one, which actually started moving from this base. Okay, this is a pattern which I've seen quite frequently, and so I was taken in with this action, but it immediately reversed. This is really rare, but it happened. I couldn't say anything. Here, okay, it's sort of like was in a positive territory. That's why I didn't apply time stop. And then probably after 10 minutes, I talking from a memory. Then it came back, but because I used the good stop, it sort of started moving up, and I kept my profit target at the desired level. And because I set this profit target on basis of momentum I've seen here, and look how big is the momentum. 2 waves, and this was a third wave. So it says there was this 2-wave momentum. So I simply thought 2 momentum must be very strong. Yeah, these are 2 very strong moves. So this strength of this move gave me confidence that this retracement will repeat this move. But this assessment could be completely wrong. There are many other situations, where market reverses after these strong moves. It's just kind of like keep on trading. Don't try to kind of stick to what patterns which you remember and you're familiar with, and don't worry, because what's called 2-to-1, cut the losses and let profits run. This is a bad guess in a hurry. Yeah, I felt quite guilty after it. Yeah, because one takes this chop very personal, because I was coming back looking at this, and this was just not moving, just chopping. Each one of these days is days where I worked on a trading a lot. That's what's on engineering quite a lot. So here again, I've seen this breakout, this early breakout, 7 o'clock, 7:30. So 1 wave, 2 waves, 3 wave 3. So again, I was here, I entered here. This is pretty much repeating for a repetition of this trade. But this time I entered much later. I entered in a 4th wave. Okay. Maybe I was screen absent and stuff. Okay, I just want to get rid of these. But they're staying with me. Okay, so I haven't introduced this clever thing about making notes about trades, but anyway, just 2 trades, 1 hesitation here, okay, but 20 points. That's like colossal. And here I was extremely lucky, because I remember this trade, because I put stop there, and it was a big stop, 3 to 9. So 6 ticks. Usually my stops are around 4 and 5 ticks. So this was extremely large stop because I thought market got exhausted because there are so many waves. 1, 2, 3, 4, 5, 6. 6 waves. I thought, no way, this is going to turn around. But I used very large stop, and that's a general truth. Bigger the stops, more profits you take, because tighter stops don't make you more money. All the tighter stops do is that they kick you out of big trades. But then if you have 4 or 5 losers in a row, then you get really big losses. So there needs to be a point of balance, but in principle, one should not try to be stingy on small stops. Because, like, let's say this trade, okay, on this trade I hesitated, or I didn't have a mental energy to enter it, so I left it alone, but it would require quite significant stop, and it would be profitable trade. It would go 2 to 1 easily. Risk reward. Okay, so moving on, 20 points. That's just huge. And this was like one big hit day when I got smashed, and this day was really bad. Lost 25 ticks, and in spite of all that, over 2 weeks of trading, I pulled off Sharpe ratio of 2. That's what's a big change, dramatic change in these trades. So one could read rationale. Okay, here I was doing notes, doing proper notes on trades, and one could pause video and read about these, what was the reasoning for the trades. But now I just want to go over everything, and don't really want to kind of talk too much. Okay, so this was another day. So as one could see from all the trading days, where was that? Okay, so one could see that one gets all kinds of days, days with very tiny profits, very tiny losses, the big losses, large wins. So essentially, you're just kind of trading, you're just going along and waiting for these large win days. And they come, large winning days come. You just keep on trading with the same approach, with impromptu rules, impromptu entry discoveries, and all that. No mechanical trading at all. So you just maintain that belief that over a long period of time you will make these really large profits. And like for example, this one. Look at this one. Boom. That was the last trade, 12 points. That's huge. For somebody who is using 4 and 5 point stops, 12-point trade, that trade immediately cleans up 3 stops, 2 or 3 stops. Okay, so then there was this day. Main thing is what the real problem is over trading, not the trading. Okay, so it's more about not hesitating, but preventing over trading. That's kind of like absurdity, or there is a conflict between these two mindsets, and actually feeling your own balance of maintaining the balanced mindset, which is neither over trading nor it's hesitating. Because all of these trades are, I kind of enter without too much thinking, and yes, I'm entering with lots of confidence, but I'm not overthinking them. And I get hit and I have losses, and I have lots of losses in a row. But main thing is make a break, work on something you like engineering or history or economics, and watch these things. Okay, and then this day is, what day is this? 29th. This is not. This last day was, look, 3 big trades, 11, 13, and 15 in one day. 3, and only one -2 loser. So, okay, I had that big losing day, and I had the days where nothing happened, but I sort of, big days come. So overall, one has the edge. In spite of losers, in spite of small winners and everything, one has the edge, and these big trades will come, and you will get to very high Sharpe ratio. And this is the last day. 1, 2, 3, and I don't have a, okay, trade 4. Okay, and there was this trade. Okay, this trade, when I said, okay, it's enough, but I was reading this. Okay, look at this. I was reading this, and I said, okay, it's going to reverse here, and but I said, okay, this is enough. This is enough because I had all this winning. I had three big winners, so I said, okay, I was kind of like didn't want to lose. I didn't want to damage. How could I say? Profits. So I didn't take that day. I was, and look, that one would make at least, if even if I took it down to here, it would be very large winner. So one kind of like, really the main rule is keep on trading. Just don't overtrade, but keep on trading. Okay, that's the main message. So that's the overview, and I think in the beginning I gave a really good summary of, and hopefully this is not very long video, so it has some value. So that's it. I will report again on this and anything. So main thing is avoid choppy markets. Keep on trading. Don't overtrade. Overtrading immediately takes to the losses. Wait for what I call volatility injection. This is volatility injection. Okay, there is something which kind of shifts some news or something which kicks the market. There is even big volume because volatility attracts volatility. Chop like this is very difficult to trade. Okay, because even if you get like, for example, this trade is very good example. I got the direction right. It immediately went in to my advantage, and then came back and hit my trailing stop. And why? Because in a choppy market, choppy price action is aimless. That doesn't have directionality. Like here, a stop loss was relatively small. Yeah, this one is like 10 to 1. No, yeah, sorry, it's not stop loss was not small because I start here. But there is this enormous directionality, and trade goes immediately in your advantage. So you want something to inject volatility. This counts, this fast move counts as a volatility injections. This choppy trend with momentum, that counts as injection of volatility. But this constant repetition of same prices, that's not. It's really going to do something else. And then this kind of made me profit. Look, okay, out of the okay, there was plenty of opportunity. So this was a volatility injection. This was some kind of. This actually stalled and it became choppy, and it again lost. Okay, this volatility, okay, it reversed on itself, and one would lose extension trade, continuation trade. But there was volatility. There was volatility, bigger moves, bigger trends. Okay, so that's essentially what I'm trying to say. Trade both reversals and continuation trades. Okay, here there was a volatility injection, and then it's reversed. Then retained itself. So volatility breeds volatility. That doesn't give you direction, but it gives you profit, because after the volatility injection, there is, say, this reversal won't be too difficult to guess, and market moved enough to give you profit. This is all volatility injection. So volatility injection, there is always quite a lot to say, but volatility injection is very important. Don't trade, avoid trading if before in a choppy markets without a volatility injection. Follow direction, but do trade reversals on significant points, like here and let's say here. That's all significant, and here this is close enough. So okay, so we are saving this one.